When you buy a home, there are various costs that you will need to pay at the closing of the sale that's in addition to the purchase price of the home itself. It's important to understand what these closing costs are and how they're calculated. Before I begin walking you through all the fees, know that there are many games played in the mortgage industry as it relates to providing estimates. Consumers often shop rate and cash to close, but rarely understand the misrepresentations made until it's too late. Our philosophy is to show every possible fee and err on the high side, so you are only surprised when costs come in lower, not higher. Be sure to check out our ebook, How to Shop for a Mortgage, as it dives a little bit deeper into this topic. Closing costs can be broken into 4 primary sections: lender's charges, title fees, local recordation taxes, and prepaids. I'll go over each of those for you in this video so you can better understand the quotes we prepare for you. Lender's charges, that's ours. It surprises many that lender charges represent a tiny percentage of the overall costs. Lenders will typically have their fees labeled something like origination fee, underwriting, processing, or even document preparation. Ours total $1,295, which is on the low side of our market. I generally see these fees ranging from about $1,250 to $2,500. That's not uncommon for a lender to also itemize a few incidental fees such as a credit report, tax service fee, and flood certification. On average, these are about $175. Rounding out the lender's fees is the appraisal. This ranges from about $575 to $850 depending on the size and complexity of your home. Now, in some cases, the appraisal can be waived using automated valuations, which eliminates this charge. So if you add all that together, our lender's fees will be about $2,000 in total. The next is points. This is a lender-controlled item, but often discretionary and tied to the interest rate that you choose. You can replace the word point with percent of your loan amount as a charge. For instance, 1 point is 1% of your loan. Using a $400,000 loan, 1% would be a fee of $4,000. I'm generally not a fan of paying points, but there are times when it makes sense. We will be sure to discuss the pros and cons of points with your specific mortgage. The next up is settlement fees from a title company. A title company is a neutral third-party company that manages the contract terms and ensures the title of your home that you're buying. They do this by performing a title search to ensure that the seller is the legal owner and that there are no outstanding liens or claims against the property. The sum of these fees usually range between about $900 and $1,500. They will also issue the title insurance policy. Title insurance protects the property ownership from losses arising after a settlement due to unknown liens or other defects in the title that existed before you closed. Lenders require coverage, but the owner's coverage is optional. We recommend speaking to the title agent about the various coverages such as basic or enhanced, or whether you should have owner's coverage at all. This fee is determined by the state that you purchase in and your sale price. In the DC metro area, the fee ranges from about 0.5% to 3/4. Using a $400,000 home, title insurance would be somewhere around $2,500. Now, here's a quick tip on title insurance. You might be able to reduce this fee significantly if you can get the property seller to provide you a copy of the title insurance policy. Most of our realtor partners add that language as a request as you write your contract. And now for what's usually the biggest charge, transfer and recordation taxes. You can view this as a one-time sales tax when you purchase a home. In DC, the fee ranges from about 0.75% to 1.5%. Maryland depends on the specific county you purchase in. However, it's mostly in line with DC. And Virginia taxes you on a combination of your loan amount and the sale price. They basically add those two together and they multiply by 0.3333%. Recording fees. This is for the settlement company to record the new deed and mortgage, and it ranges from about $100 to $350 depending on the jurisdiction and loan type. Now, you will see some miscellaneous third-party fees. Some of them will be self-explanatory, such as a survey to map out the property boundaries, a termite inspection, realtor admin fees, and those kind of things. If you see these fees and you're unsure if they're needed, simply ask your loan officer or the settlement company and they'll provide a detailed explanation. Now for prepaids. These fees are related to the home itself and not actually the real estate transaction. This includes prepaying your annual home insurance and establishing an escrow account for future payments. Typically, a lender is going to escrow 3 months of your home insurance in addition to you paying the first year premium upfront. The property tax escrow is often 4 to 5 months in Virginia and DC and 8 to 9 months in Maryland. This difference is caused by how taxes are paid. In DC and Virginia, you pay taxes in arrears, while in Maryland, you pay them forward. So there you have it, an entire rundown of all the mortgage-related closing costs. If you have any questions about the estimates that we provide, or you would like us to review others that you've collected for accuracy, please do not hesitate to reach out.